Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. We're going to talk a little bit about this potential recovery here for Bitcoin and key levels, also things and areas that you have actually voted on through our social media. Furthermore, too, rising wedge pattern, 3-day pattern here, kind of letting us know we may be breaking down further. Same thing as well with the weekly too. They're both looking pretty ominous, but at this point, mostly comparative analysis between these coins, see if there's any outliers, CME futures, Bitcoin dominance, and stablecoin dominance, as well as crypto market overview. We got a pretty important one here today. Be sure to stick around. Let's take a look. All right, folks, before we jump into the charts, I want to touch on some quick polls here, of course, just quickly get some perspective here on what people are thinking right now on social media. Most people here, at least 50% of you so far that have voted within the last hour on my Twitter, we're looking at about 50% of you are thinking we're going to see a bounce off the all-time high at 112,000. I would agree with that sentiment based on the simple fact that that's a previous all-time high. 112,000 was retested multiple times before it was broken and effectively hasn't been retested yet. When we look at YouTube, we can see in my community here, we're looking at majority of you are bullish here, thinking we're going to go up from here and the bottom is in. Let's go ahead and find out and see if that is a realistic possibility for us. Jumping into the rising wedge pattern here, just want to quickly note here on the 3-day time frame that we have three MACD divergences here on the 3-day time frame, all of which have been fizzled out except for this most recent one. It's starting to gain some momentum. So as this continues to increase, when the histogram goes higher or lower in this instance, the more weight it has, the more volume effectively and or more so momentum it's going to continue. So with that happening and a potential break here of our ascending trend, it's potentially a bad sign here for Bitcoin, letting us know that the 112, possibly even lower, K range is possible. Okay, let's go ahead and take a look here. Weekly time frame, just to kind of note on this, I've touched on this usually once per week for the last few weeks, but generally speaking, we do have a bearish type of divergence here, lower highs in the RSI and higher highs on the chart pattern itself. So while this takes a while to take place and happen, we're in a position right now where we may actually be on the downtrend. A lot of times when you lose this moving average here on the RSI, you'll see a shift in momentum here, right? So the last time we lost our moving average, roughly had about probably about 1 to 2 months worth of bearish divergence. And then when we look here, when we lost this as well, while the price didn't necessarily pull back, it worked itself into a descending channel before it broke out after that. So I think further downside makes sense. It just depends on a lot of it factors into how well Bitcoin performs this week. I would say if we can break that 120K barrier and close above, then I think it's going to be a different story altogether. Quickly looking at these coins here side by side, just give you some perspective. On the left-hand side, we can see Bitcoin all-time high, 123 and some change. Obviously, 124.5 was the all-time high, but I'm referring more so to candlestick closures. We saw 123.3 as that resistance. Furthermore, too, if we look at Ethereum and how well it compares, these red lines aren't all-time highs. For these other four coins, they're effectively just the local resistances that should have been retested as a new low, but didn't. In other words, in this case, 4,400 held fairly well for Ethereum. However, obviously it lost that level when Bitcoin pulled back, but you can see it does tend to rally every time Bitcoin recovers. So that is nice, but still a descending trend no matter how you look at it. All these other coins are performing the same, which is quite poorly. Until they break their lower high pattern, we need to presume that it's going to continue. Okay, and that's kind of how traders are supposed to trade. You trade with the trend, and that's what we like to identify in this channel, but also of course some outliers and trend reversals, but we don't have anything right now telling us that, at least not as of yesterday. We'll look today and see, but there's a good chance with this kind of divergence, we're a few days out from actually acknowledging a shift in momentum. What we're more likely to see right now is a strong recovery here to retest the descending trend. It makes sense for us to see a short-term bounce here. Those are commonly referred to in the industry as a dead cat bounce. Now, on the top left, we got Bitcoin dominance, ETH. On the bottom left, top right, stable. Bottom right is a total, excluding all three. The whole point of this is just kind of give us perspective of how well altcoins are really, truly doing. This guy right here kind of lets us know that altcoin dominance is decreasing. So we got money flowing away from altcoins and essentially going, in most cases, into stablecoin and or Bitcoin. Okay, so that's kind of how this cycle happens. What we're looking for is for stablecoin dominance to slow down, money stop going into stablecoin, Bitcoin dominance going at least sideways here, and then possibly lower. Then we have better chance at trading alts. For right now, not really a good chance. I mean, it's okay to buy the dip right now in a sense, but also it's not really all that smart either. Mostly because we want to presume the price will continue lower. Once more, we'll take a look and find out. I sent this already out to my community here earlier. As far as CME gaps, all the forming gaps over the weekend are filled. And at this point here, we have no current CME gaps available on the charts. In other words, excluding Ethereum, obviously this is the outlier here, we have no CME gaps for Bitcoin and or Solana, okay? So mostly good, but it does kind of propose the fact that we should see further downside. There's a lot of confluence at the $4,100 mark based on some moving averages. We'll look at that here soon, but for ETH, I think 4,100 makes a lot more sense. Touching on ETH and just basically our trade signals here, took some nice profits on our ETH short, 40% in one day. Looking at Solana, 35% 4 days ago, and roughly 3 days ago for SUI. So these are all trades we took leading into the weekend and or on the tail end of the weekend. And those are just based on those divergences that we've been seeing and the fact that we haven't broken this descending trend. Jumping over to this here really quick. Crypto market overview, there's not too much to really note here. Altcoins are still in good shape though. We can see our altcoin dominance essentially. We're at 1.61 trillion for the altcoin season index, mostly just market capitalization. And that's a good sign. That does imply, that also includes stablecoin, keep that in mind. But for the most part, we're still in good shape there where we have more overperforming coins versus underperforming coins. Okay, and that's just kind of a good index letting us know that we're in decent shape. We stay above 30, honestly, we're okay. I'm not super concerned with that. And we do take a look at derivatives, we can see that open interest is high. Generally speaking, that's a positive sign. It does imply as the price continues lower, we keep getting more buying pressure, and that's ultimately a good sign. We do take a look here at ETF net outflow. We can see on the 14th, that was roughly 4 trading days ago. Keep in mind that was, I believe, on Friday, if I'm not mistaken. Friday was essentially, we saw some outflow, right? And of course, it makes sense. We had a red weekend. Still waiting for the data to come through here on this chart, but for the most part, with that kind of breaking even or drawing dead, that's somewhat of a divergence, kind of just letting us know that we should expect further downside. So all that can be very conflicting. So try to take it with a grain of salt. Those aren't exact sciences, but what we don't want to look at here on the back end for Bitcoin is just kind of recognizing that we have this little bullish backtest rather of our descending trend. I'll show you on the charts what this looks like, but this is generally a good sign when you retest that a previous descending trend. Essentially establishes potentially a new low. We can also see here too that retail investors, basically those top traders, these are large bags effectively, when they're trading with a high volume, they are essentially in good standings. In other words, they're all taking longs versus shorts, specifically over the last 4 trading days. Open interest is still also high too. Correction, this is the bid to ask ratio. There's more bids than asks. Essentially meaning people are trying to buy, so every time the price goes down, they're buying these dips. Now, whether that's good or bad, it really depends. Obviously, their positions could be closed and reopened, but for the most part, it's just kind of a gauge of the fact that the market's still fairly bullish. Okay, so it's not a bad thing at all in the overall sense. When we look at open interest, 116,000 is that main area of open interest. That's my interested area. I mentioned to my community in my Discord that, because when I send out my Bitcoin updates, I like to kind of clarify. I think we need to reclaim 116,000 to have a chance at recovering here. So I think that we're in a position right now where 116K is that point of contention. We reclaim that level, we hold there for a couple of days, we break our descending trend, then we're in better shape to take longs with confidence. Between now and then, we got this sell wall of 25 billion in short liquidation delta, letting us know that taking a long position right now is ultimately risky. Now, the key takeaway too, though, and you got to understand, this is how manipulation works. A lot of the market makers know that a lot of shorts are trapped right now. They're probably going to pump the price here tentatively to trap late longs and then wipe out those early shorts. And it's just kind of a whole rinse and repeat thing. So oftentimes until these channels are broken, you're better off waiting and on the sidelines and not trading. That's just kind of the common rule of thumb. But once more, scalpers are scalpers, day traders are day traders. You're going to find those opportunities. Taking a look here, this is a pretty obvious sign to me that in the last 7 days worth of liquidation, there is a ton of longs here that still need to get swept. 113,000 is that lower shelf. So I would not be surprised if we see at least one more leg down, possibly even 112K, which makes a lot more sense, previous all-time high range. And we see that as the new low. So that's kind of where we're at. I'm expecting one more leg down in the overall sense based on what I see here so far. Now, we do have this falling wedge pattern. Let's talk about this really quick and just recognize these are generally bullish based on the simple fact that you can only sell for so long, right? We've established lower lows for almost a full week, about 5 trading days. So that's something that we want to recognize here. So when we look at the charts, we recognize that the truth is the price could break out. Now, all moving averages are above the price. RSI, everything is essentially letting us know that we're in pretty bearish scenarios. However, we got to recognize too, we did bounce off 30-minute RSI, money flow index is increasing, stochastic swinging up. So I think a short-term relief rally makes sense. It's just kind of one of those things that's par for the course, considering the circumstances, because there's blood in the water. Market makers know that they're going to try to sweep once again those early shorts. And try to allow long positions to stack up so they can hit them once more. The key takeaway here is we need to be above 116,000 today at minimum to be able to kind of reclaim this range, or to be able to show that it's worthwhile holding. And then furthermore too, obviously break this descending trend. And I personally would feel much better if we close in the 117 to 118K range, right? Once more, that's that local high. Getting above the local high is a super, super important thing. So overall, I'm not bullish nor bearish on Bitcoin for the moment. While I do think we're probably, we're probably going to see another leg down, we're probably going to see a relief rally between now and then, and that's just going to trap the late long. So be very careful if you are a late long. Adjust your stop loss into profits as you continue to maintain profit. That's the key thing that you need to understand. Most people fail to do that. The best traders are just really good at taking profit because they have good risk management. So if you're going to be a better trader, you got to understand that securing profits is kind of an important part of trading, right? Anyways, I talk a lot about that in my community. Let's move on to Ethereum, see what's going on here. Back in data first. Let's go ahead and get up here. Let's refresh these charts and just kind of see roughly what we're looking at. And to clarify too, and I talked about this yesterday and pretty much all last week, as a matter of fact, just that 4370, that 4380, round number 4400, that level is the current resistance for us. So unless we can reclaim once more 4400, we can presume that we're going to go down from here. Now, we already have a short position open with Ethereum. Otherwise, I'd consider another short at 4400 roughly. That's just kind of that point of control here locally. And we want to recognize that heavy amount of open interest is going to be exit liquidity. As the price comes up, people are going to want to sell because they're underwater on their $4,400 longs. So we're probably going to see a shift in momentum there. But once more, previous high should have worked as a new low. It did for a little while. Now it's going to work as a new high. Once more, resistance at 4,400. Let me take a swig of water here and look at liquidation delta. This is at 25 billion. That rivals Bitcoin, by the way. So we take a look at short delta. Commonly, you see coins like this max out in the 20 to 30 billion range. Now we got 25 billion. That explains the reasons why we're probably going to see a short squeeze to the upside to squeeze out some of those late shorts there, and then potentially continue on its way down. But me personally, I'm leaning more towards further downside based on this liquidation level here between 4,100 and 4,200. There's a lot of confluence in that 4,100 range, partially because we've already identified the CME gap down as low as 4,100, but also, there's confluence in the charts too, with that being the lower range here of this previous area, basically. So we had a pretty solid amount of consolidation between 42 and 4,300. So I think we're due to see this range here once more. So looking at the daily time frame for Ethereum, this doesn't really tell us too much, honestly, because it's a daily time frame. But the thing that's important to walk away from here, once more, we got a fair value gap as about 40.80. So this fair value gap is more likely to get hit here next. If we lose that level, obviously we're going to talk about the $3,600 to $4,000 range. But between now and then, that 0.5 fib level, that lower fair value gap, that lower area of liquidation, that lower area of CME gap, there's like 5 or 6 things all pointing towards 4,100. So I'm leaning more towards taking a long around the 4,100 range, and we're going to hold our short position open until then. That's kind of the concept. So Ethereum is certainly looking a bit on the bearish side. By all means, keep in mind, it's not like it's super bearish. The daily time frame still has some strength to it, but once more, you don't rely on moving averages for support. People seem to misunderstand that. We look at MACD2, we're also diverging here as well, or soon to diverge. I think there's a good momentum shift coming here from Ethereum. This does require Bitcoin to continue lower. Keep that in mind. Bitcoin doesn't continue lower. I'm sure we're going to bounce and pivot off this $4,400 range. But either way, that's kind of where we're at here for the moment for ETH. Okay, good or bad, that's how it is. Looking at the daily time frame here for Solana, let's jump into the back end first, get a baseline, take a look at that. So Solana, what are we looking at here? 177, we discussed this previously, kind of that last area of open interest. That's essentially the lower end of the support range for Solana. We have 5 billion liquidation short delta. That's quite high for this coin, which once more, you're going to see those kind of outliers occurring right now because most altcoins are overextended and they have a ton of shorts in the market, which is all the more reason why a short-term pump makes a tremendous amount of sense right now. So once more, if you see a short-term pump, 185 to 190, that's that local area of liquidation based on the last 7 days of trading for Solana. But once more, I don't like to take longs like this in the blind, even though we are in a lot of support levels for most of these altcoins we're looking at. It just doesn't feel right. Something feels off in the market right now. So just know that the market makers are just probably sweeping those early shorts, trapping late longs, and we're going to go down likely one more time here. That's just kind of the premise that we see based on the charts and the backend data. So daily time frame, nothing super stark and amazing here. Solana's actually looking in decent shape. We're losing our moving average here though, and stochastic swinging down with MACD trying to diverge. So I don't really love the way that this looks here. I've talked about that for a while. It's half the reason why we're short on Solana. We shorted at 195. So how much lower is it going to go? I think 177 makes a lot of sense. The reason why, we have this 0.618 fib level there with a significant amount of volume, as well as that lower range of support based on open interest. Open interest, fib levels, those are all things that are extremely important when used in Confluence. These aren't just magical Elliott wave numbers here, just kind of throwing random numbers on the chart. These are specific things that all kind of happen together. So when you have a lot more things happening at the same place, the likelihood of that level holding is higher. So while I don't know if we're going to see the 177 here soon, if we do, that would be a solid consideration for a long or just a good take profit target for a short. Okay, so don't get super greedy though. I think that altcoins are still very strong overall. While they are pulling back concurrent in a lot of cases with Bitcoin or 2x of Bitcoin, they're not like that 3 to 4 to 5x of Bitcoin as we've seen in the past. So even though this sell-off is significant, it's not significant enough to to really worry too much about. All that said, speaking of significant, we do have a pretty heavy divergence here on SUI. This is another coin that we shorted. And when it comes to SUI, the concept here is that even though, yes, we have a head and shoulders pattern here and it's pretty much played out, you don't just short this coin right now because of pattern, right? I try to teach my people that, anyone in my community and all my videos, it's important to not get too crazy with candlestick patterns. So just know head and shoulders, yes, that's all well and good, but we need to make sure that we are also trading with Confluence. So looking at the open interest ranges here, obviously we can see the heaviest amount of open interest is 405, that $4 resistance range. Half the reason why we were able to short in the 380 range. I think our average entry is 380. And we look here, we're kind of zooming in. There's a secondary and tertiary amount of support here at 350 and 340, just kind of rounding down a little bit. But 350, 340 is that lower support range for SUI. About 600 million in short liquidation delta. While that's not a significant amount, that is quite a lot for this coin. When we look at the overall sentiment here though, there's a lot of liquidation still left down as low as 340, even 330. So this kind of speaks to the open interest ranges too. So I think one more leg down makes sense for SUI as well. So I'm gonna be getting ready and prepared for some nice longs here in the relative near future once we see one more leg down. If we don't see that leg down, we'll have to recalibrate and figure out a game plan. But between now and then, getting crazy with shorts when everything's overextended doesn't make a ton of sense, and just jumping into a long because it's overextended also doesn't make sense. So these are one of those situations where the good traders are going to sit on the sidelines and wait for better opportunities. I'm not I'm not calling myself a good trader by any stretch, but I'm pretty consistent, and that consistency comes with patience. It's not an easy quality to have in trading, but if you have it, it's very helpful. Okay, so just be patient, folks. Try not to FOMO in. Right now, we're in this weird little transition where a lot of traps are being laid out by market makers, and it's very deceiving. Just to quickly note in the daily time frame for SUI, we do have a macro support level here at 360. Keep that in mind. Even though we've wicked down significantly, we truly haven't closed below that. So that's why you oftentimes want to wait for the daily candlesticks to close before you consider trading in either direction. Right now, we got to presume 360 will hold. It's a 0.618 fib level. We got our 50-day SMA there, and we also have a significant amount of support there based on previous highs and lows. So all that said, that's kind of the consensus there. There's not too much else to really note here. Obviously, we are in a descending trend, so the best thing you want to wait for is to see if we can hold this 360 level or not. We close below 360. I think further downside makes sense. I would say 340 to 330 would be the next potential areas of consideration. Let's move on to XRP and see where we're at here. XRP is another one of those unique ones that's actually holding fairly well. I mentioned that I'd be interested in a long in the $2.90 to $3 range. We're kind of right there at this point. It's difficult to warrant a long position in the current state of the market because we have a ton of open interest at 310, 320, 330. Okay. All that said, liquidation short delta is at 2 billion. That is quite a lot for this coin, truth be told, and there's not a lot of liquidation left to the downside. So there's a lot more reasons why XRP should be able to rally back and continue higher because it's entering its lower support range. So let's talk about that and see where we're at. So once more, we want to look for confluence when we're trading. So when we have that, you can trade with more confidence. Now we have a descending broadening type of wedge pattern here, megaphone, whatever you want to call this. This is generally a bullish sign. Now it's only bullish if you break this local point of control, the center line of that descending trend. So you can see here, there's quite a lot of obvious where the price was like, nope, 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 can't go any further and down, right? A lot, it just kind of, it dropped because the bulls lost pressure. All that being said, we created a fair value gap on the way back down. Even though 310 is a solid resistance level for us, there's a decent chance we do pivot off this level because this is, once again, 0.618 fib level. It's that lower range that we saw a decent amount of volume here, a more local low. And the overall sentiment, if I recall correctly in the daily time frame, there it is, yeah, it's the 50-day SMA hanging out right there too. Okay, so we've got 2 or 3 additional areas of support in that 290 to 295 range, kind of emphasizing that lower support range for us. So this is not a perfect science, it's never exact, but those are all kind of beneficial signs, if you will. However, we want to be smart and not go crazy, right? Because we lost 50 in the RSI, money flow index is pulling back. We look at the 4-hour time frame. Even though we are starting to see a bit of a pivot and a bounce off 30 similar to Bitcoin, once more this coin moves very consistent with Bitcoin, we can see that divergence. So my thoughts here is that if Bitcoin's going to pull back, this coin's moving concurrent with Bitcoin in a lot of ways. Is it really all that smart to try to take a long right now with this coin? My thoughts on that would be no. It doesn't seem advantageous to take a long, even though we have some positive confirming factors on the back end, and there are some areas of confluence. If we can spend more time in the $2.90 to $3 range, and Bitcoin keeps going sideways and down, and this coin here, essentially XRP, holds that range, then we'd start to see that shift in momentum. But right now, if we look at the comparison of these coins, majority of all coins are doing poorly versus Bitcoin. Okay, until we start to see a difference there and a shift, there's no reason to take this to buy this dip because Bitcoin's probably likely going to continue lower, right? So once more, a lot of trading altcoins is based on your knowledge of Bitcoin. And my thoughts here of seeing the 112 to 114K range for Bitcoin soon makes a lot more sense to me. So I think I'm going to hold off and wait for a long position on this coin. But once more, if we can maintain 290 and Bitcoin keeps going down, that's the kind of trade I'm going to be looking for. So those are my thoughts there. Hope it served you well. And that's kind of what we got there. Quick little touch on BNB too as well. You can see BNB, the highest manipulated coin in the market. Same thing with Binance effectively causing that dump from yesterday, or at least likely culprit from that dump earlier today rather. We can see BNB hitting its pretty much all-time high of that 862 range. So it is forming a cup and handle pattern. Coincidentally, this coin's performing better than the majority of all coins in the market right now. There's no doubt that this what's happening in the market has to do with this. Anyways, if you didn't catch my video from yesterday, BNB is usually an outlier there, kind of letting you know when BNB is doing well, it's going to front run altcoins, similar to what ETH used to do. And in a lot of ways too, when BNB starts to dump, you can expect the rest of the market to do so as well, because Binance is really known and Wintermute is known for dumping the market. So anyways, just some friendly advice there. Be very careful trading right now. I think it's best to just kind of wait. I'm going to wait a couple more days to consider a long, and I may consider a short or two depending on the opportunities there, but I think it's you're better off leaning towards shorts versus longs right now. That's the easy way to understand it. Careful being trapped into a late long right now. All right. That's all we got. Thanks so much for being an amazing part of my life. I look forward to working with you. Have a great rest of your day. We'll see you in the next one. Take care.